There you
Okay,
go.
top
All
things,
right.
top
Yeah,
three things to watch. Okay, let's step all over each other, Patrick.
No, that's
top
fine.
three things. Top
I'm
three
drunk,
things
so
to watch
that's fine.
next week. Yes, I know you've been having. Well, you beat us to it. Okay, this is what happens when we send him to Florida. He starts drinking without us. Okay, here we go. Let's do number one or number three. I'm in charge of this because I was the one who chose these. First one. Does the OPEC cut production? I think this is what you should be watching next week. We've seen signs that they're trying to do it. They really need to, because the reality is that China is calling force majeure on a lot of contracts. They're trying to get out of things. Demand is falling off a cliff. If they don't, we could have a serious situation develop where oil goes into kind of a negative feedback loop downward. I see the Russians were kind of all on board and saying they were going to do it. Now they're kind of waffling. I sure hope they do, because I'm hoping for that quadruple bottom. Not much different than the quadruple bypass, but anyways, it feels like I could feel like the same at this rate because I'm long too much oil. But anyways, watch for that. Does OPEC cut production? Number two. I'll let you go, Patrick.
Well, Powell testifies in front of Congress. So what are you looking for?
He's got to be dovish, even though things are so bad throughout the world. And at the end of the day, the U.S. is the central banker of the world. If he's not dovish enough, I worry. But I actually think that this virus is the kind of cover that people need to be dovish. Even the most ardent, hard-nosed kind of hard money person has to look around at the kind of what's happening to our economy and be worried and say to themselves, you know what, this is not the time to talk about hard money. This is the time to make sure there's plenty of liquidity. So I anticipate, or maybe hope, not sure which one of that is correct, but I anticipate that Powell will be dovish enough and that we will see much reassuring going on about that he will provide the liquidity that the global economy needs.
There you go. And so, Kev, what is number one?
Well, what is this? We got to stick with it because it's still the coronavirus. What is it? Does this finally hit a point where it either accelerates and becomes a problem because it's escaped China, or does the market finally, figure out that no, this is going to be something that's contained? This week really didn't solve our kind of our questions, right? We thought that this might be
and this is huge
by now.
Because even though the S&P is not reflecting it, there's components of the markets that have just been devastated in the last few weeks because of this, and it really creates a binary thing, because either they're ridiculously oversold and things de-escalate, and there's a huge opportunity, or things get exponentially worse, and then it ges ugly. Really, it's so binary. We just need to find out what the next step is, right?
I agree with that analysis that it is very binary, and I would argue that the S&P is actually being a safe haven. I think the risk assets have gravitated towards the U.S. and that you see people selling EM, selling Europe, and they're buying the U.S. because, let's face it, if you have to be long risk assets in this environment, if you think that this is going to get worse out of Asia, then what do you want to be long? You don't want to be long anything but U.S. S&P. It will be the best performing stock market in the world if this problem intensifies.
I'm not totally sold on your idea.
No, really? You think that if this? So let's just say tomorrow.
Well, don't start putting things in my mouth.
No. But so you think? Like, what I'm saying is that if tomorrow this gets out and let's say starts spreading throughout the world, and you are a long only manager that has to be long, where do you want to? What stock market do you want to be long?
Okay, but I'll push back on it there, because those managers can't control this narrative. If you have a scenario where there becomes genuine fear that this actually is, let's say, spreading to North America and is going to cause economic harm here, I think that the animal spirits of investors will pull the rug out from under the market in a heartbeat. I'm a seller on your idea that somehow
okay, but Patrick, I'm not saying it's going to hold up. I'm saying it's holding up relative. What you're saying.
Okay.
So that's all I'm saying.
Okay, but that didn't sound like that when you were saying.
Oh, I thought I was clear, but anyways. Anyways, no, because there's a lot of people, Patrick, that are long-only managers. They need to be invested in equities somewhere throughout the world.
Mm-hmm.
And so what I'm arguing is that bid has been intense because those people are afraid, and those people have no choice but to go to U.S. equities because that's
okay. Let me flip it on you, Kev. All those money managers that are now loading up U.S. because they don't want to be in those economies. Suddenly, if your mother roll stimulus narratives starts to happen, because let's say Corona tapers off, and they grab a handle on this, and suddenly a huge stimulus around the world comes in, does that cause actually the complete reciprocal, where the U.S. gets hammered hard because that money flows out of the U.S. back into where all this new stimulus is happening everywhere else in the world?
On a relative basis, yes. I could see a situation where the S&P grinds sideways to down and the rest of the world is screaming higher. That's how much I think this is occurring. Anyways,
the point is, what is interesting about the virus is that it is going to create incredible volatility in these asset classes based upon these the outcome, and there's just going to be some really big moves, and it's just about being nimble enough to kind of recognize when one of these huge trends is being set in motion, right?
For sure. One of the things that you need to be aware is that we could be at the epicenter or like the kind of, I wouldn't say epicenter. That's not the right word. I guess these could be the pre-quakes for the real big quake. And you see a lot of hedge funds that, listen, they are setting themselves up for a big one, and they are very, very bearish, and they are all in on the short side. And does it work? Maybe it does. Maybe this is the big one. Maybe I'm wrong, and this is going to get out into the wild. And if so, there's going to be no bid under here. I 100% agree with you, Patrick.
Yeah, well, we'll see.
There will be no bid, and it'll be scary as heck if this thing gets worse from here. But I don't think that's the right bet.
Hey, listen, this weekend, lots of new information will be coming out. It'll be really interesting to see how things progress, right?
Right.
Anyway.